Hello everybody, Nathan here. Talk to you today about home loans and refinancing. I normally stick to automotive stuff, but I get questions all the time about this because I used to be a loan officer and a mortgage banker. Pretty straightforward stuff, but a couple of tips and tricks that'll keep you from getting ripped off when you go to refinance or purchase your home. To start with, from your loan officer or mortgage banker, you will see a truth in lending or a good faith estimate. Most of the time, your loan officer will provide this no questions asked. Sometimes you get the runaround though, and they'll give you documents that appear to look like them, but they must state at the top truth in lending or good faith estimate. Essentially, the good faith estimate is a rundown of all the fees associated and costs associated with the loan. Stuff to look for is underwriting fees. This is what you're paying to have your loan looked at by the bank. Generally, they shouldn't be more than $1,000. If so, you're getting taken for a ride. It'll show the cost to either pull credit, the title documents, the closing fee. You'll see things like the appraisal fee on there, the flood certification. These things are pretty typical and normal. The idea of the good faith estimate is to tell you what the cost of the loan is itemized out before you actually get to the table and sign the documents. There's another thing called an origination fee on there. An origination fee is basically the fee you are being charged by the bank or the loan officer to do the loan. This is pure profit for the loan officer or the bank. You do not actually even need to be charged one. Generally, from coming in the field, I recommend that people pay the loan officer something. You wouldn't want to work for free, so they shouldn't either. Generally, it's based off points, percentage of the loan amount. So let's say your loan's $100,000 and they're charging you 2% origination. You're going to pay $2,000 in origination fee. Typically, what I see from mortgage banks and loan officers is anywhere between a half a point to 1%. I think is fair and reasonable, but it's up to you to negotiate that with your lender or go down the street to a different one if you think it's too high. The truth in lending basically takes into account all of the fees that you're paying, and then it calculates it back into an annual percentage rate with your current rate for the loan. So to make it real easy, let's say your loan is at a 4% rate for 30 years fixed. What they're going to do is they're going to take all the fees off the good faith estimate, they're going to add it to the loan amount, and then re-amortize the payment. Now let's say your rate now on the APR is about 4.5. That is what you will see on the truth in lending. Basically, it takes into account your fees and tells you how much it's going to cost you over the 30 years for the loan. Generally, I like to see people's APRs on the truth in lending be within a half a percentage point of the actual rate of the loan. Now that being said, it could be less, it could be more if you're doing discount points. Basically, you're buying down the interest rate. That's going to cost you money up front to do that. I'll discuss what discount is or a buy down in further videos just to kind of clarify what you're looking at. The other thing you'll see in truth in lending is your prepaids. Prepaids are not fees, they're actually prepaid items that you're paying towards the loan. These include things like escrow for taxes and insurance. You have to carry homeowner's insurance on a loan, the banks require it, and you have to usually fund the account for the escrow to pay your taxes. What prepaids basically cover is that you're going to build into your loan payment the cost for the insurance and the taxes. So that way every 6 months or every year you don't have to cut a big check to the insurance company or the government for your taxes. Instead, you just make little increments which the lien holder or the mortgage company or the bank sets aside and then makes a lump sum payment every 6 or 12 months whenever those payments are due. You have to understand that when most banks and mortgage companies work today is that you sign up with them, they maybe hold your loan for a month or 3 months, and then they sell your loan on the secondary market. What that means is they're just going to originate and do all the paperwork to get the loan started, and then they're going to sell it to somebody else for the long-term servicing. So you might receive a letter saying, hey, your loan's been sold, you now have a new servicing agent. When this happens, the one thing you need to know is they cannot change the terms of your loan. The loan is set in stone from the day you sign the paperwork at the title company, or if you're getting them sent to you at your house. I recommend usually you do it at a title company because it's a neutral location and it gives you an opportunity to read the documents before you have to sign anything. The other thing I highly recommend if you're purchasing or refinancing a home is that you get the closing documents the day before you purchase the property or refinance it. I can't stress this enough that you should be able to look at the final documents before you get to the title company. Otherwise, you're kind of sitting at the table with the gun to your head and people looking at you waiting for you to sign. and they're usually not very patient when you want to read everything in the packet. Also, it's a lot of documentation that you want to take some time to read, so it's good to have it up front. The other reason I stress people get the paperwork up front is so that you know what's in it before you get to the table. That way, if something changes or something's different from the good faith estimate and the truth in lending, that way you have it. They're required to provide you with the truth in lending and good faith estimate within 3 days of filing an application for a home loan, refinance, or purchase. So make sure you get those, and make sure they say at the top, good faith estimate and truth in lending. That is a regulated document by the federal government, so it's important you get the actual truth in lending and good faith estimate and not something else that they're trying to pass off. So this is just a little bit of scratching the surface on how to make sure you don't get ripped off on a home loan or a refinance. I'm going to talk some more about yield spread and how that affects your interest rate, how home loan interest rates work, and some more terms you might expect to encounter when you're purchasing a house or refinancing. So tune in more later, and I will have some more videos. Have a great day.